This accounting mini lecture focuses on cash management. Okay, first, let's talk a little bit about cash. If you pull up the financial statements for any company that you can find on the SEC, you're going to find cash listed on the balance sheet. Sometimes it'll say just cash. Sometimes it'll say cash and cash equivalents. Normally the line item will include both. And I think, oftentimes when we think of cash, we think of physical cash, the paper money that we might hold in our hands. But cash and cash equivalents will include more than that. It will include not only currency and cash that's sitting in various bank accounts, but cash equivalents will also include highly liquid investments. Normally, the criteria for cash equivalents is that in order to be considered a cash equivalent, the investment has to be convertible to cash within the next 90 days. So it would be very, very highly liquid investments that would be included in cash equivalents. Okay, so let's talk about some basic principles of cash management. First of all, we want to make sure that we plan our cash receipts and payments to ensure that we have enough cash to cover our obligations. Secondly, we don't want to keep excessive cash on hand, and we'll talk more about that in just a moment. So let's talk about some basic principles of good cash management. First and foremost, we have to collect our receivables. As we know, the way that most businesses operate nowadays, especially big companies, they're going to operate on a credit basis. So when they sell to their customers, the customer's not going to immediately hand them cash. Instead, they'll send the customer an invoice, and then the customer will in turn, pay it hopefully within the payment period. So we're going to carry those receivables on the books. We want to make sure that we're collecting those because basically, if we make a sale and then are unable to collect that money, that sale is completely worthless. So it's very important that we properly manage the collection of our receivables. Secondly, we want to delay payment of liabilities as much as possible. So what that means, clearly we want to pay our bills on time to avoid late penalties and that sort of thing. But, if we receive a bill from a vendor that is, say, due in 30 days, then ideally, we would want to probably pay it within 25 to 30 days rather than paying it immediately within 2 to 3 days. Because if we pay our liabilities faster than we're able to collect our receivables, we run the potential to maybe fall short on cash. We want to monitor our asset levels. We want to plan our expenses. And this kind of goes back to the management function of accounting in terms of budgeting, planning, and controlling and that sort of thing. And then finally, we want to invest excess cash. So this is the primary reason that we don't want to just sit on unnecessarily large cash balances. As we know, most of the time, cash balances are not really earning a lot of interest, so they're just kind of sitting there. So ideally, if we have a large amount of cash, it would be better to invest that either in investments such as marketable securities or possibly just reinvest that into the business to help the business expand and grow. Okay. Control of cash disbursements is very, very important. This is the most highly susceptible area in the business to fraud in terms of misappropriation of assets fraud. And misappropriation of assets is just basically stealing or embezzlement. Areas of the business where cash is dispersed, such as payroll or accounts payable, are very highly susceptible. Employees may figure out ways to create fictitious employees in the payroll system. They may create fictitious invoices for fictitious vendors and try to send that through the accounts payable system. There's a variety of ways that people can take advantage of the cash disbursement system. So it's very important that we monitor the way that the cash is dispersed and also who has access and authority to authorize those transactions, and then also monitor and review those on a regular basis. Thank you for watching this video on cash management.